All right, everyone, welcome back for the episode of This Weekend Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So markets, again, kind of sideways in the beginning of the week. We did have September OPEX. So a lot of premium, I think 5.3 trillion in premium expiring this Friday. So a big quarterly OPEX here. And you're going to see the markets were able to break out and make new all-time highs post FOMC. So we had a little bit of a chop and whipsaw. You can see here, if we look at the intraday, a lot of a big choppy kind of contested reaction to the FOMC, and then the market's liking the 50 basis point cut here so far. And ultimately, markets able to close the week at a new, fresh, all-time high. So markets here, trend is up. I talked to you guys about the 570, 5,700 area. We did hit that. And that's where we've stalled out right now. Now, coming into the beginning of the month, I talked about this kind of wave of selling, especially that holiday shortened trading week. I said, feels like some traders may be front-running seasonality. Everybody knows September is the weakest month of the year. And I said, I think they're kind of getting a little off sides here, and we got a short squeeze because of that. At least I think that's kind of what was happening there. However, what they don't remember, they never tell you, is that the back half of September is always the weakest area. So we're, usually after that quarterly OPEX, which will be next week, is where that weakness can come in. So we'll see if the markets do pull back here. I did say that I thought 570 would be a pretty good level of resistance based on the calculations I've done. And we'll see if that holds true next week. But ultimately, trend is up here. And until the markets give us a high volume sell, again, specifically on the spiders with, 100 million shares and, at least at bare minimum, a 1% down day, usually like 1.5 or more. With 100 million shares, the market can go higher and we can just, pull back on light volume. So just be aware of that. But, we could be coming into a small period of risk here. There's also lots of hedging that will go on over the next 4 to 5 weeks as we get closer to the election. And there's lots of sectors, stocks that can get moved around, namely solar stocks, marijuana stocks, energy. Lots of policy and regime changes can obviously bring about hedging, which can, cause rotation, can cause some near-term pain. But overall, market is at all-time highs, and that's all we really need to know at the moment. If we look at the triple Qs here, again, so technology managing to close above that 480 handle. Didn't quite get through this pivot up here at 485.54. But we did break out of this the small kind of wedge pattern here. And the Qs have caught up a little bit relative to the spiders. They have been in backing and filling mode. They have been correcting and they have been underperforming lately, but they have started to catch up. So triple Qs here getting a little bit more of a bid. I'm still watching these defensives. If we start to see defensives, XLP, XLU, XLV start to come in, which we have a little bit. XLU still at new all-time highs, but XLP and XLV have kind of backed off a little bit. If we continue to see that theme with the Qs outperforming, that's a positive for bulls, right? You want those defensives to underperform. You want the risk to outperform. So you want to be looking for that moving forward. But again, market's still in a good technical position right now. Also, Russell 2000 small caps had a really good week, right? So here's your gapped up Monday, and we held the gains Tuesday, Wednesday, additional gain on Thursday, and then just backed off a little bit on Friday. There is a lot of resistance right here at 225. So just put that on there. You can see that's where we attempted to get through, right in this area, 224.50, 225. We tried to get through that multiple times throughout the summer after that big pop. Couldn't hold it, and now we're testing it again. So if we look at a monthly as well, we have this big wide range candle and then 2 inside candles right now. So IWM still holding up, and again, we want to see that. So defensives backing off and small caps and tech stocks catching up would be the best configuration for bulls here. But IWM still holding up. The Dow also fresh all-time high. And again, Dow kind of falls in line with defensives. So not to say that we want them to go down, but you'd rather see the NASDAQ and the Russell outperforming as opposed to the Dow, as Dow is essentially a blue chip index. But markets, fresh all-time highs, semiconductors, again, trying to break out of this little wedge here. I guess we, technically we did. Still didn't get above the 50-day moving average. We did have a little bit of M&A talk, and this was kind of funny to me. I was discussing this with one of my partners, and we were kind of just joking about it, honestly, about how cheap Intel is. I think their market cap's only 83 billion now, and it would be interesting, like how much cash would one of these companies need? But I guess Qualcomm now allegedly put in a bid for Intel, or was in talks with them. But look at this fall Intel has had. So this is a stock that nobody wants right now, and just really behind the times. So interesting. 83 billion, I think they're valued at. So we'll see if that ends up playing out, or maybe that was just chatter that they put out there. But either way here, semiconductors, again, they've been underperforming the last couple of months. If these start to outperform, that's what bulls want to see. You want to see this catch up relative to the other indices. What has outperformed, and I've been putting you guys on this for a long time, cloud software, fresh all-time closing high here. I've been saying, look, if the semiconductors back off and the market is going to continue to rally, which is what has happened, it's going to take another tech sector, and this has been the one here. So IGV, big rally off the lows in August, little pullback, and then a push to new highs. Again, look at the difference, right? So look at how much of a lower high you have here compared to IGV. It's barely a lower high compared to that July top, and now we're at all-time highs. So again, my cloud software sector is trying to break out here. So IGV very strong. Oracle is an absolute powerhouse here. I think that is a little stretched here in the near and maybe even medium term. Dow Transports. So this is an interesting one. So they had a big sell on volume. That's because of FedEx earnings. So on Friday, so that obviously skewed the index down, but we knew that there was going to be some resistance there anyway. I talked about this on my channel. Look at all these pivots right here. Right? We've been trying to get through this area for the last year, and we have been unable to. However, if we go back and zoom out again, you can see here you have higher lows, right? So each time it hits this, it's coming back from a higher base. So general thought process is this eventually can push through these levels and break out. And again, it's defying all of the recession odds, the yield curve inversions and uninversions. But again, that's why a lot of people go broke trying to hit that home run recession trade because you're not the only person doing it. We all know the yield curve is uninverting, right? We all know that it was inverted, so we know recession's coming. But if everybody sees it, there's not really alpha in getting ahead of it. Speaking of yield curves, here's yields right now. Here's the 210. So again, continuing to be uninverted. I will say now, finally, 3-month 10-year, finally starting to get real uninversion speed here. So, it's only 93 bips inverted right now, but it's starting to get traction. You can see the 3-month here right now, and it's coming through the 3-month as well, as opposed to the 10-year. So we know that that's, due to cuts. And that is finally starting to get going. So, but anyways, as far as yields are concerned, I think the short end, 2s, 5s, it's still kind of soft. I think the long end here is due for a pretty good bounce, though. In fact, I know a lot of people were long TLT, meaning they were, against the yield ahead of the Fed decision, and we've gotten a nice rally after that, specifically on the 30s. Nice rally, and we're back above that pivot there. The 10s did manage to close back above 3.7 on the weekly. So I think yields here could rally a little bit, as personally, I think the FOMC was kind of priced in. Additionally, I understand being long, long the short end, long the note, not the yield. But the long, we should be uninverting up, and that steepener makes sense that the long end would continue, whereas the short end would be down. So I think that was kind of an offsides trade anyway. But short term, we'll look for the 30-year to bounce back up here. If you get through 4.2, I know it seems a little stretch, but this has legs possibly to 4.35, maybe 4.4. And I think the 10s, if this can get through this 4% area, I mean, we could squeeze to 420. I think that would catch a lot of people off guard. I'm not saying that they would stay up there forever, but it's definitely something that I'm watching here. And I think you could make an argument here. I mean, jobless claims on Thursday came in much better than expected. So there's data out there saying that the Fed could be cutting into growth. I mean, there's people that can make that argument right now, and there are people who are making that argument right now. And you see what gold is doing, which of course we'll get into later. It's dangerous here. We could be looking at Arthur Burns. I think we will be eventually, even if growth does slow down in the near to medium term. But anyways, let's get into home builders here and move on. So home builders down 2.25 on Friday, but they still had a weekly all-time closing high. So you can't really say anything about that. Home builders are just so relatively strong, right? I mean, yields were going up last year, and they started going up, and then yields go down and they still go up. So home builders just have such a tailwind. They are heavily supported by government policies as well. So I think that's something a lot of people miss when they try to fade this sector. But home builders acting well. VNQ here finally got to the 618, and it did pull back. So we'll see if it offers a little bit more of a dip. It barely pulled back this week, but it did react there. We'll see if it comes in a little bit more though. But still a strong chart. XLF still a very strong chart as well, right off of all-time highs. The one financial I do not like right now is JP Morgan. The trend is still up nicely, but I don't like that big sell candle, and I don't like that we're not really challenging it. Like, we're kind of just drifting neutral to up. Like, there's no V shape here. So for me, I want to see that red bar negated, and then I'll get a little bit less cautious on JPM. And JPM is the most important financial stock. So always keep an eye on that. But outside of that, XLF okay, KRE is okay, had a nice up week. KBE had a nice up week, and the broker dealers as well. New all-time weekly closing highs there. Oil has continued to bounce. So oil pretty much V-shaping off of the lows here. We got a one-day pullback on the 20 MA. Again, very crowded sector. I talked about this. Very much like bonds, very much like the dollar, very crowded into the FOMC, right? The Fed's cutting, and there's not really much else to that. I mean, why are you staying short into that at the lows of the chart? So we did get a pretty good squeeze. Oil was able to reclaim 70 by the end of the week. So looking for, you got the 50 moving average, and then this trend line here. I do think oil, if it hasn't bottomed already, I think it will within the next, we'll just say 6 to 8 weeks. And I think it does start to go back up again. And I don't mean like, range bound, I mean up. But right now, near term, getting a good bid. XLE, this may have bottomed as well, but I want to watch pattern on this. Pattern or a higher low, I think, could possibly get me interested in some of these energy plays again. There's XOP and OIH, so we'll have to watch and see how they hold up over the next month. But I think energy is starting to get intriguing here at these levels. CCJ, very good outside move. They had some news this week as well, but we talked about this W pattern here. Big W, and then a bull inside bar, essentially bull flag, and very good move. So that did follow through. And what can you say? Weekly support held. Right, you go back to, that was the Fukushima. That's where we were before Fukushima. And we've just essentially back tested that on the monthly. That's all we really did. So Camco still very strong. URNM also closing back above the 50-day. Still got some resistance at this pivot, but chart looks a lot better. So does NJ. So uranium getting a very good bid here this week, and could be filling out those W bottoms. Nat gas, another good week. So again, I told you guys it was likely bottomed here, and we're looking for higher prices into November. And up move, flag, continuation. Simple as that. Speaking of W pattern, there you go. Up, sideways up. So 250 is the next stop, and then you got the 200 moving average here. But after that, I mean, You got a pivot there at 270, but you see how you didn't, this is all just short sellers. You didn't build any resistance on the way down, right? You didn't go here and then put in a pivot and then go, no, you just went straight down. So it can go up just as fast as it went down. And if we look at the X contract, which is what we will be on in a few days, that had a very nice bid on Friday. They actually bid way more than the V contract. So nat gas still got a positive spin on this for the next month or two. All right, so dollar index did close. It didn't have an up week, but what I like about it is it tried to probe through that 200 moving average, and then we closed back inside of this range. So again, rate cuts should be bearish dollar, and the dollar didn't go down. So that's what we call a news failure. So there's potential here for the dollar to rally back up here. 102.50 is next kind of big level if it can get through these pivots. I still like 99.50 as support if it does try to go lower though. So on to gold here, fresh all-time high, fresh all-time weekly closing high. So we talked about the 2610 area. We hit it on Friday. And then we kind of just pulled back for a few days. Again, I didn't say that was a short. It was just an upside objective. And now we're higher. So gold at new all-time highs here. The next kind of areas, we're basically into it now, 2650 to 57. And then 2690 are the levels I've calculated on it. But gold, very, very strong here. And it is gold rush time in China too. Take a look at this. So this is Chinese gold trading. Look at that. Unbelievable. So gold, probably the strongest sector in the market right now. Maybe you could argue like XLU or maybe insurance, these types of defensives, but gold is a defensive in many ways, but yeah, very, very strong. GDX here. 52-week highs as well, actually multi-year highs, I think. GDXJ and GoAU also very strong here as well. Silver still lagging a little bit. It's still very, it's still in a good technical position, but lagging a little bit, obviously not at the highs here. Not a terrible pattern. I think this may have a little bit more time on the clock here before it's really ready, but it's definitely setting up. I don't have any problems with silver right now. The one minor thing I'll say is, no pun intended, is that we're not like quite through those 52-week highs on the mining ETFs there, whereas GDX has been making those higher highs. But still strong. Platinum here with a pullback. We knew that was going to happen, and then palladium. I told you guys about this. We go right up into these pivots, and that's where we're pulling back. But I think the lows are in on this. And when I say lows, I don't mean for the next month. I mean for like years. So some people ask me, why was palladium going up so much this week when, all the other silver and, gold was kind of sideways until, Friday, really. I think, smart money is looking at it and saying, look, this is a huge opportunity to catch up. I mean, you could chase gold here at all-time highs, right? This has already been rallying all year. Or you can pick something that is got a lot of room to make up. And I've been telling you guys about this for a while. Still got some work to do, but I really like the pattern there on the weekly and the monthly. All right, copper here. It did have an up week, but we're watching now. Could this become a bear channel? So just want to be careful of that. As you can see, if we go to a weekly, so we have a down move. This could be considered like a bear channel, but if we can negate that by getting back above, I'm just going to say like 440. If we can get a weekly close above 440, 445, I think that would kind of negate that pattern. But again, the economy is slowing down. The yield curves are inverting. Yet copper was very green on the week. So is it going to be are we going to have closer to a stagflation? I think that's much more the likely scenario, personally. So, all right, Bitcoin had a good week as well. We talked about the little pullback, and then it inched up nicely. Again, if we get through this pivot, I think it's over with. I think we're going to go up there, and then I think we're on breakout. So right around here, like 60, 64 to 65. I will say there's a good chance we could come back down one more time, though. But right now, you know, you've got, again, lower low, or low, lower low, lower low, lower low, higher low, right? Lower high, you know, high, lower high, lower high, lower high. If we make a higher high, I think, you know, it's telling you it's getting ready, right? We take this high out, and we have the blue line up there, which is the previous all-time high, the old all-time high. And again, I think, you know, I've been telling you guys for probably 6 months now, all this needs to do is go sideways to down and let the 20 moving average catch up to price. We're almost there. You know, by next month, I think it'll be close enough for me to say, yeah, it's caught up. So that's why I say we could maybe have one more little, but I think this is setting up. So I do like Bitcoin here. Again, a lot of noise inside of this channel, but to me, the big picture, you know, it just looks like a weekly bull flag. So, but anyway, Bitcoin still acting well, had a good week. Again, so for spiders and for the market here, again, new all-time highs, and trend is up. So until we get a reversal, defer to the trend here. But, you know, we do have seasonality. We could see some backing, filling, some pulling back. But again, if it's not accompanied by heavy volume, it can just be a pullback. So just be aware of that right now. And again, we'll continue to take it one day at a time. So anyways, guys, I'm going to wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com. I'll see you guys all next week.